these recordings. We put a couple of links in the chat as well. Our social media profiles for Instagram. If you want to book a call, there's a link there for that as well. And also the YouTube channel link. Carmelo, the floor is yours.
Thanks, Alex. Thanks, guys, for joining tonight. Alex, I just want to make sure, before I begin, you can see the screen properly, correct?
And yeah, it says Bank of Canada interest rate announcement.
Awesome. So tonight we're going to be talking about what happened today, and I'm sure everybody's heard. First, the introduction. Myself, my name is Carmelo Boutis. I'm a mortgage agent at yourmortgageyourway.ca, and my Instagram email address is provided.
Yeah, I'm Alex Schwaniecki. I'm a realtor of Remax Condos Plus in Toronto. There's a QR code there as well that has all my links. Yeah, this is more Carmelo's.
Well, we want to have. Hopefully, we're gonna have a good conversation as we go about this, right? So, the first thing, like today, the Bank Canada meeting, and the key thing is what's happening. Before the meeting was all these tariffs, right?
Yes.
And the results, obviously, surprisingly, Alex, because I know you're looking for 0.5%. That's why I kind of wrote it there. Not ready to do 0.5% yet, right? All you could do today is just 0.25%.
And according to the news, like if we didn't have this kind of uncertainty, he apparently wasn't going to do anything.
Yes. Like 3 weeks ago, I guess there's like, for lack of a better term, like there's a probability chart, like Vegas odds. There was, only like a 20% chance that they were going to cut rates today, 3 weeks ago. Right. So things have changed, and obviously first over the week, then days, and there's and still like for the next meeting, there's still we don't know, and I'll talk about that later.
I know that January started off pretty aggressively. Like Toronto, like real estate in Toronto was looking like the market was looking very optimistic. Buyers were out, lots of multiple offer type of situations, and then February came into play, and things just came to a drop. Like we saw a 28% decline year over year in transactions, which was pretty crazy. Last time we saw something like that was when the pandemic started, which we were talking about before we started recording here. So
this is where, Alex, I know you were kind of, optimistic with that 0.5%, but it only came in at 0.25%, right? So you were right that they cut. And I'm telling you, Alex, every Bank of Canada meeting, literally within 60 seconds, I got Instagram messages, I got phone calls, emails, like everything just lit up, which is fine. I'm happy. Like my customers call me, my people I'm working with call me. Like I'm happy to serve people, right? I just need more than that 1 instant minute, right, to get back to everyone the same day.
Are people asking you about their fixed rate mortgages?
A lot of them do. I get questions for everything, and what happens with interest rates, and the Bank Canada lowered that prime rate by 0.25%. That impacts everyone who has a variable rate mortgage, a home equity line of credit, an unsecured line of credit that's tied to a variable rate. That's an instant. Starting tomorrow, your interest rate's 0.25% lower. Fixed rate mortgages is a little different. And I had to wait till the end of today to take a picture of what happened when it comes to fixed rates. Anyone who's looking for a fixed rate, and the most common fixed rate in Canada is a 5-year fixed rate. So how it works is the banks have to borrow money. The cost for them to borrow money is slightly higher than the 5-year Canadian bond yield. So that's why we look at the bond yields as a proxy. And yields, ironically, went up by let's call it 0.9% today. So
yeah, they were in a pretty low position, right? It was just, so were they at like 2.5, almost 2.5 earlier this month, like beginning of March?
Beginning of the month, right? So I have people have approvals with like, oh, my fixed rate coming down by 0.25%. It's like, no. And right now, as of today, technically the yields are higher, right? Going to the banks and the back office, asking for extra discounts. I'm not going to get extra discounts when their cost of money went up, right? Which I actually found this a little bit surprising, right? Because again, rates, the short-term rates went down by 0.25%. I didn't think the long-term rates would go down by the same amount, but the fact that it went up by almost 0.1%, that's a big move. And you can see, Alex, since the beginning of the year, the massive swings. We had a massive downturn in February, then a big bounce, and this all these things that are happening is creating a lot of volatility.
Mhm.
Like for businesses, and when it comes like for mortgages, remember we're dealing like let's talk about the big five. They're national. They're across Canada. They have thousands of branches, tens of thousands of employees. They cannot make changes on a dime. So when rates come down, they're really cautious. And when they see volatility this high, even though rates and yields have coming down, their uninsured mortgage rates really are not moving. So volatility is now impacting those looking to get a mortgage because it increased their cost of funds. And I'll be talking about that later on. I got a chart showing that. So I want to also share, like, again, what's happened over the past year. You can see like the Bank of Canada lower the rates. But you see, Alex, the 5-year bond yields in the past year, considering the Bank of Canada lowered the rate by 2.25%, are only down by like 0.5% from, I think that's like March of last year.
That's it, eh?
It's fixed rates don't move. This is just to visualize how fixed rates don't move the same way variable rates move.
Yeah, it seems like it's kind of trading in the same kind of band there between August and now, just like up and down, like in the same range.
Yeah, it is. Again, it's hard to show because I can't get the graph to expand a little bit more in the columns and the numbers on the left. Technically, there's a slight downward trend. We're getting lower lows and lower highs, and I don't want to go into all the statistical stuff like the stock market. But the trend is down. It will continue to move down. But as the Bank of Canada changes that overnight lending rate, doesn't have that same relationship to fixed rates. So anybody looking to borrow, get a new car loan, mortgage, anything that's tied to a fixed rate, your rate didn't change.
Okay.
Also one thing that's happening is what happened with interest rates in the past? Why were they so high? We had inflation, and you could clearly see how inflation has come down to that band of under 2% that the Bank of Canada wants. That what they want, really, under 3, no lower than 1, within that range. And we had that one comment they had with the meeting today was they know inflation for February is going to be a little lower because that GST holiday we had. Yeah. But they were already talking about, with all these implied tariffs, they're expecting March inflation to tick up. Like the GST holiday is going to go away. It's going to have a small impact with regards to, okay, prices will be a little bit higher, especially because there's a few goods that, got that GST or HST rebate. But prices of goods are already starting to move up.
It's going to take time if these tariffs stick around. I think it's going to take some time, right, for the economy to feel the effect. It's not going to be like an overnight thing.
Exactly. The Bank of Canada today, their conversation, listening to their question period at the end is, yep. The one key point that they made was they cannot save the economy if there's an all-out tariff war. Mm-hmm. Flat out, that's what he said.
I heard that, yeah.
Right? He's there to help, kind of like the way he described it, the way I interpreted it was he's here to help to assist, but he can't. If tariffs are here and the tariffs are long term, there's nothing that could change that. Prices are going to go up, inflation is going to go up. And one reporter asked him, well, if inflation increases higher than your comfort level, are you going to be looking at raising interest rates? And it's like, whoa, well, that's a good question, right? Because I'm curious about that.
Yes.
And his answer was, across that bridge when we get there. He couldn't really comment because we don't know what's going to happen.
there's so much uncertainty right now, and I think that's the main thing here, right? It's just like so many unknowns, and it's just like day by day navigating, meeting by meeting. Circumstances are always changing. It's hard to respond.
It is, but I like to always like let the data speak for itself. Like inflation's come back down. Keep an eye on this. This is a 1 year, Alex. So I'm going to go show another inflation chart later on, but look at how the trend is, right? We're going to point something else in a few moments. Unemployment. This is something that I think the Bank Canada is really paying attention to, and I want to put in perspective a long-term chart, right? You could see from the COVID lows, or the 2022 when the economy was doing really well before they started raising interest rates. Unemployment was ultra low, 5%. Like in historical means, it is ultra low. Alex, I'm sure you've heard me before saying 6% is kind of 6.5, 7 is what I've seen in the past, right?
Yes.
So the fact that we're at 6.5, it is a lot higher than what we were at before, but our economy is a lot different than it was 20 years ago, right? We have a bigger population, so it was a bigger population, a bigger percentage. Is actually more people, which is what concerns me, because if unemployment continually rises, which I anticipate in the short term, that's going to lead a problem to real estate.
Yeah, unemployment for sure is going to be rising.
Yes,
because these people need time to navigate the labor market and land somewhere else, right?
Well, they need to find a new job, right? Whether they are a homeowner or they're paying rent, that's going to put a big strain in real estate. Right. The big banks, when they look at their delinquencies, and I hear a lot on social media with regards to like, record foreclosure and all that stuff. In the grand scheme of things, Canadians pay their bills. We are super low. We have super low numbers when it comes to foreclosures. But I'm pretty confident to say that the big five, they're looking at unemployment. They're looking at these tariffs and how they're going to impact the economy, and which sectors are going to get impacted. The good news is Canada is primarily a service. We have a lot of employment in service industries that that don't involve tariffs, but we have also a lot of manufacturing, and we export a lot of goods to the U.S. They're our biggest trading partner, right? So unemployment is something that we all need to pay attention to. So Alex, again, what to expect moving forward? Really, I was listening today that the U.S. is now putting, I think, steel and aluminum tariffs on the EU, and it's just getting like bigger and bigger. And
the EU is putting tariffs on the U.S.
Yeah, it's changing by literally by the hour. The truth is, and I don't think anybody knows what's going to happen, because we've had the Canadian tariffs supposed to happen February 2nd, March, now April 2nd. We have our own Ontario premier that threatened tariffs for electricity. Then they countered with increasing the steel and aluminum from 25% to 50%. Like, everyone's just, I don't think clear minds are thinking right now. We have a new Liberal leader, which will be hopefully sworn in to the Prime Minister soon, so we have at least some sort of leadership, and our government could actually work. But Alex, election may happen afterwards, so it's kind of hard. So this is something I found quite interesting. It's kind of like an uncertainty index, right? And we are clearly we could clearly see what happened.
Who was in office at that time?
Sorry,
just Trump brings it. Should be called the Trump index.
Yeah, but we could see how there's a lot of uncertainty with COVID. And that was understandable. It ended up not being this global movie threatening pandemic where billions are dying, although a lot of people did die from it.
Yeah, it's horrible.
The uncertainty today made that look like nothing, and I thought that was crazy. And we're all in an environment, we're all working, we're all trying to produce goods. We're all trying to just live our daily lives. So this uncertainty, I find quite starting how it's just in a matter of weeks. Right? How it just spiked up. And with all this uncertainty, listening to the Bank of Canada today, they were talking about how a lot of businesses can't have trouble. Like their businesses are going to adapt, especially the sectors that are they're going to have these tariffs, because they could go to other markets. But the time it takes for them to find that new customer, hold inventory, and ship the goods to the new market, there's going to be a cost to it. So one way or another, prices are going up. It's certain. We know this is happening. The scary part is, are we going to see what happened back in the 70s, where inflation went up, come back down,
Oh my God.
and then spiked up again? Now this is a little bit older. I couldn't find anything a little bit more current, but the blue line is inflation from back to the 60s to the 80s. I would say that looks like gold. It is from as of June 30th, 2023. I couldn't find anything a little bit better, but we know inflation's come down a little bit more. We went down to the twos.
Oh, thanks.
But with tariffs,
Bring it over.
are we,
Garbage or my?
No, put it in the
On
fridge.
here for a second.
That's the best part.
Go ahead.
with tariffs, tariffs are clearly going to lead to higher prices. Nobody's debating that. The question is, if with inflation and prices going higher, inflation going back up, is this something that's going to be ongoing and create future higher prices and future inflation to pick up like before? Because the Bank of Canada could not let that happen. Right? They're aware of that. That's why that one reporter asked that question. If inflation rises, are you going to be prepared to raise rates? And I think the answer is going to be yes.
Mhm.
Right? Because we can't. This would be catastrophic. This would be worse than tariffs. A slowing economy and prices going up, and they have to raise interest rates to fight the inflation. The good news is, with tariffs, the slowing economy is going to be a greater impact than tariffs, because if people are losing their jobs, less people are buying goods. Well, it kind of also helps control inflation. There's less money chasing the same number of goods, right? Which makes things inflationary. However, there's something I want to point out where hopefully, we need to start paying attention, because we don't want history to repeat itself.
Right.
So,
Okay.
kind of want to.
That's a lot of stuff.
I want to kind of get some feedback. So those who have joined, Alex, yourself, I shared a lot of stuff, and I'm more than happy to kind of listen and kind of answer as many questions as I can. Because I am familiar with economics. It's something I studied when I was younger. That's what I got my degree in. But I am clear. I'll be the first to say I'm no expert. I'm expert in mortgages, not what's happening day to day.